Ladies and gentlemen, good day and welcome to Jindal Drilling Q1 FY25 earnings conference call hosted by Antique Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Varatharajan. Thank you and over to you, sir.
Thank you, Del. Good afternoon, everyone. On behalf of Antique Stock Broking, I'd like to welcome you all to this call. We have from the management side, Mr. Rajan Jindal, Managing Director, and Mr. Kaushal Bhagnani, DGM, Investor Relations and Finance. A warm welcome to the management as well. And over to you, sir, for your opening remarks.
Thank you. Good afternoon, shareholders, and thank you for joining our earnings call. In FY24, we improved upon revenue and profitability on account of deployment of all 5 rigs. In FY25, our performance will improve further as one owned rig, Jindal Supreme, will be redeployed on a new contract by November 2024 at a higher rate. Further, we are in the final stage of acquisition of rig Jindal Pioneer, which is owned by one of the joint venture companies, and are awaiting approval from statutory authorities. Our earnings will improve immediately on acquisition of the said rig. These 2 factors will influence earnings in FY25 and we remain positive on the same. I will briefly summarize key financial indicators. On comparison of Q1 FY25 with Q1 FY24, revenue increased by 86%, EBITDA declined by 7%, PAT and EPS increased by around 15%. On comparison of Q1 FY25 with last quarter Q4 FY24, our revenue reduced by 12%, EBITDA reduced by 20%, with a consequent reduction in PAT and EPS of around 28%. The decline in earnings is primarily attributed to 4 rigs being under operation in Q1 FY25 as compared to 5 rigs being in operation in Q4 FY24. The 5th rig is currently under refurbishment and is expected to be redeployed onto a new contract by the 3rd quarter of FY25. Our earnings will revive from the 3rd quarter of FY25 onwards as the rig under refurbishment commences operations at a much higher rate. Further, one of our rigs will get onto a new contract next year in FY26. Whilst there was cancellation of an ONGC contract earlier this year, we remain hopeful of redeployment of our rig at good rates in next financial year. I would now like to take you through our earnings presentation. The first slide is about the company. We are, as mentioned earlier, the leading offshore drilling services contractor in India's oil and gas sector. We have more than 35 years of experience, especially in the sector of offshore drilling. We are supported by an efficient and experienced operational and management team who ensure that our efficiency is not compromised and we achieve the highest levels of safety. The efficiency of our rigs in operation are in excess of 98.5% and we are extremely proud of that statistic. We've been supporting and serving ONGC for the past 3 decades in their drilling programs. They are our satisfied customer and we have always explored opportunities with them. Apart from 5 offshore jackup rigs that we operate from time to time with ONGC, we also provide mud logging and directional drilling services to the oil and gas sector. The details of the rigs on long-term contracts are given on slides 4 and 5. Slide 5 also talks about the prevailing order book position as on 30th June 24. The rig which is going to be redeployed in the third quarter of FY25 is Jindal Supreme, and the operating day rate is $88,859. Financial highlights on the next slide have already been discussed. The temporary decline is on account of one rig being in between two contracts. Annual highlights are detailed on slide 8. The EBITDA mix is given on slide 9, in which it is clear that the rig segment contributes most of the profit for the company. The borrowings are mentioned on slide 10. We have been net cash for quite some time. That position continues to improve on quarter-on-quarter basis. One term loan was fully paid on 31st May 2024, entirely from our internal accruals. Our net cash position as on 30th June 24 is at 68 crores, which is an increase of 17 crores from the position on 31st March 24. As all rigs are now contracted at higher rates on new ONGC contracts, gross debt will reduce rapidly over next 12 months. Shareholding structure is mentioned on the next slide, in which some marquee investors are mentioned. That concludes the presentation, and I would now request that the floor be open for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while taking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avi Agarwal from Arihant Capital Markets Limited. Please go ahead.
Hello. I wanted to ask that the acquisition of one rig from JV will take the total number to 6 rigs. And what would be the operating day rate for that? What kind of revenue or order book we can expect from that acquisition?
The rig which we propose to acquire from the joint venture company is currently deployed in Mexico at a rate of $40,000 per day. That rate is a bareboat charter rate, which means that no expenses are incurred by the rig owner. Once we acquire the rig, the contract will be assigned to Jindal Drilling, and that contract will continue till December 2025.
Okay. Thanks a lot.
Just to clarify, the rate of $40,000 per day is not comparable to the rates mentioned in the earnings presentation, because the nature of contracts with ONGC are different from the contract on which the rig is deployed in Mexico.
Okay. And post the completion of the contract, what do we plan for it?
Once the contract is completed in December 25, the rig will go a few months of refurbishment, and then it will be brought back to India for possible deployment with ONGC.
Okay. Thanks a lot.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Okay, yeah. Thank you very much, sir, for this opportunity. I just wanted to understand this first up, the Jindal Pioneer. So when are we getting this? I mean, we said we are expected to deploy it till September 25. But when the billing for it will start for us?
No, it is on contract till December 25, but the contract is with the joint venture company right now.
Yeah.
When we acquire the rig, then the contract will get assigned to Jindal Drilling.
Okay.
From the date of acquisition of the rig, the contract will get assigned to Jindal Drilling.
And when is that expected? This
It was expected on yesterday basis, but we have not yet received the final approval from the regulator. We are following up with them.
Maybe
We
one
wanted
to
to
2
do it as early as possible. We still want to do it as early as possible, but we just have to wait till we obtain necessary approvals.
Understood. So maybe, I mean, in 1 to 2 weeks, this contract will be assigned to Jindal Drilling from JV company, right?
No, I never said that.
I mean, as of yesterday, it was supposed to get assigned. I mean,
On yesterday basis means that it's already delayed. We've been following up with the regulator for more than 3 months now.
Okay. More than 3 months now. Okay. Understood. Fair enough. So what it means for the company? I mean, ideally, we already are getting 50% of the revenue accruing from this rig in our P&L, and now we'll get 100% once it get directly into our company. So is that the right understanding?
We follow the equity method of consolidation, so the profit of the joint venture is consolidated below the line.
Okay. So this consolidation is below the line, so the entire revenue will come and EBITDA will come. And on the bottom line, the impact could be to the extent of 50%.
As of now, yes, to the extent of 49%, which is the ownership of Jindal Drilling in the joint venture. But if you look at our standalone financials and our consolidated financials, there is no impact above the line because of the method of consolidation that is required under Ind AS.
Okay. So I got a little confused here. So what you mentioned is that once this JV is directly under Jindal Drilling, there will be no impact on the revenue or EBITDA because of this drilling.
I have not said that. I don't think I can be more clear on this.
Yeah.
Due to the equity method of consolidation, the profit of the joint venture, depending on the percentage of equity holding in the joint venture, is consolidated below the line.
Correct.
Line-wise consolidation does not take place when you do equity method of consolidation.
I understood. So line by method consolidation is not happening right now, but once it comes into us, the revenue and corresponding revenue and EBITDA will be coming to the company, right?
Yes. However, the profit of the joint venture is being consolidated below the line.
Understood. Fair. I got it. It's very clear now. And just a clarification, you mentioned it's earning right now $40,000 per day, right?
Correct. That's a bareboat charter rate, which means that almost the entire...
Yes, sir. Can you just, you were saying about the per day rate, yeah.
Jindal Pioneer is currently operating at $40,000 per day. That rate is a bareboat charter rate, which means that almost the entire $40,000 per day is flowing into EBITDA. There are no expenses being borne by Discovery Drilling, which is the owner of Jindal Pioneer, except for certain administration expenses.
Understood. I got it. That's very clear, sir. I think that would be it from my side. All the very best to you. Thank you.
Thank you.
Thank you. The next question is from the line of Pinkesh Thakarani from Profit Gate Capital Services. Please go ahead. Hello, Mr. Thakarani. Your line has been unmuted. Please proceed with your question.
Yeah, I suppose I am audible. I just wanted to know about this fifth rig that is going under refurbishment on Q3 FY24. And you are saying that the revenues to derive from that. So basically, is that the ONCG one, or it is connected to some other JV? Or I just want to know about what would be the day rate for the same. What could be the impact on the revenues going forward?
The rig under refurbishment is Jindal Supreme. It will be redeployed in the third quarter of FY25 at an operating day rate of $88,859.
Okay, got it. Yeah, I just missed that point earlier. Thank you so much.
Thank you.
Thank you. The next question is from the line of Kishan Mudra from Antique Research. Please go ahead.
Hi, sir. Just one question from my end. So, on the order book of 2,000 crores, have you given any guidance on what would your EBITDA margins look like on this?
It is difficult to give guidance on quarter-on-quarter basis because sometimes when a contract concludes, the revenue of the rig goes away. So margin for that quarter will decline as it has happened in the June quarter. Generally, we operate between 30 to 35 margin range if all rigs are operational. Obviously, rigs which are owned will generate higher EBITDA margin than rigs which are rented because the rental payable to the rig owner is missing in the case of rigs which are owned. For the purpose of your modeling, you can estimate a EBITDA margin of 30 to 35% based on our current blend of owned and rented rigs. So 2 rigs are owned and 3 rigs are rented.
Understood, sir. Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Udit Sengal, an individual investor. Please go ahead.
Yeah. Good afternoon, sir. I wanted to know what is the situation on the international front as far as the day rate for rigs are concerned. Because we know Saudi kind of suspended its program for 22 rigs. And since then, what is the latest situation on the day rates? Have they gone up? Are they stable? Have they gone down? And secondly, when is the next ONGC tender expected?
Hi, good afternoon. So, internationally, the day rates are still at the high levels. It hasn't really declined. The rigs which have been have been removed from operation in Saudi will not be coming into India, so it does not affect our demand. So we expect the rates to dip slightly from our last rates because of higher competition, but not significantly as it does not really affect our supply.
And secondly, sir, regarding the suspension of the ONGC tender, so can we expect it to revive back after the monsoons, or is there any timeline?
So obviously the demand is there. The government wants more and more rigs and to increase oil production. They can only increase oil production if they deploy more rigs. The reasons for why these contracts were cancelled is unknown. So I'm sure the demand will aggregate and there'll be a lot more rigs coming in the next tender.
One more thing, sir, just a small suggestion. I'm an investor in your company. You see, some of our other competitors like GE Shipping, they are giving the NAV of their ships, right? So whatever the present value should be after getting valued. So if we could also do, if it is possible, do something of a similar exercise, the market could recognize what kind of value our company holds. Just a suggestion from this.
Okay. Mr. Kuldeep, we've received that suggestion earlier as well from a few other individuals. However, the NAV that is being given also depends on what could be the future cash flows generated. So, since the market has been quite volatile and we recently started investor engagement, we are a little apprehensive as to how that will work out. So whilst your suggestion is appreciated, we will wait for some time before we start doing that. We will wait for our earnings to become more stable before we go ahead and do that.
Okay, sir. Thank you from my side.
Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Pritesh from Lucky Investments. Please go ahead.
Yeah, hi, sir. Sir, I just have one question. In this JV number this quarter, the profit from JV, what is in this? So the number is a fairly high number for this quarter, considering the 2 rigs and the rates that are deployed at.
The reason for the number appearing to be on the higher side when compared with the previous quarter was because in the previous quarter there was a one-time impairment in one of the joint venture companies. That one-time impairment having taken place, the earnings have now normalized, and you should expect similar numbers from the joint venture companies because they're operating at good rates, both rigs of both joint venture companies.
So this 40 crores per quarter run rate is what you're saying is a normalized number now?
It also depends on exchange fluctuation because those numbers are in dollars. So maybe if you can build some cushion for exchange fluctuation, then you can take a similar figure.
So in quarter 3, where you, I think, deployed Virtue, right, in the quarter 3?
We deployed Virtue in quarter 3 of FY24. So 1 month towards the end of October 23, Virtue was deployed. And
so you had couple of months of Virtue in quarter 3, revised rate.
Yes.
And then you had some impairment in quarter 4. Because quarter 3 number was, I think, 7-8 crore minus number, and 0 number. And quarter 4 was a minus number. So what was the impairment taken in quarter 4, if you could quantify the impairment?
We've already communicated that last time. If you refer to our earlier results, you will see that number has been detailed in a note under the result. What also changed from quarter 3 of FY24 and quarter 4 of FY24 was the rate at which the rig in Mexico was deployed. So till 31st December 23, it was deployed at $35,000 per day. That rate increased to $40,000 per day from 1st January 24. However, the improvement in rate of Jindal Pioneer and the full quarter of operations of Virtue 1 were not captured on account of the impairment. That impairment was around $7 million under equity accounting method for Jindal Drilling.
Okay. So it's to do with the impairment because $5,000 for 90 days just means about 3.5 crores number. So that's not the swing number. The swing number is the $7 million. Can you tell what was the Virtue repricing at?
1 second. The swing number is the impairment. There is no question about it. I'm just letting you know that the earnings profile of Jindal Pioneer also improved, and the earnings profile of Virtue 1, despite having improved in the 3rd quarter, was fully captured in the 4th quarter. Now, both these two positive factors were more than negated by the impairment in the 4th quarter. But in the 1st quarter of FY25, all of that is fully captured, and I think that is how the figure will reflect going forward.
And what is the repricing in Virtue? From what price to what price it got repriced?
So Virtue got repriced from $40,000 per day to $80,000 per day.
So you had a $40,000 swing into 90 to 82. So that also is a 30 crore number. That also you have 50% holding in it. So that's a 15 crore swing. 15 plus 3 crore comes from Pioneer, about 18 crores. This is also pre-tax. So I'm just wondering, where did the 40 crore number come from? Is there any one-off that you have booked in this quarter?
No.
No. So for estimate purpose, we have to take 40 crore now as a number for the next 4 quarters?
Yes, but please build in some cushion. 40 does not mean 40. 40 can also mean 37. It can also mean 43.
That's okay. A 10% currency swing is okay. But other than that, there is no one-off.
No.
And have you drawn down debt in the Virtue JV?
No, sir. Both joint venture companies are debt-free. Except for shareholder debt, both joint venture companies are debt-free.
Okay. Is there any change in depreciation method by any chance?
No.
Okay. So we are now building in a 40 crore per quarter JV profit number until you merge the company, basically. Once the merger happens, or once the acquisition of the rig happens, then the JV number goes away and it comes to your full line number.
Yes, and since you're so particular about numbers every quarter, I will also let you know that in standalone numbers of Jindal Drilling for the second quarter of FY25, earnings will decline from first quarter on account of refurbishment of rig Jindal Supreme.
Okay, there will be a refurbishment expense.
Yes.
And what is that expense? How much is the refurbishment?
We are not disclosing that. Also, we are not sure the extent to which those expenses can be deferred and amortized for the duration of the subsequent contract. We are in discussion with our auditors, but that impact will be there in the next quarter.
Okay, done, sir. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Raj from Arja Partners. Please go ahead.
Hello, am I audible?
Yes.
Yes, sir.
Yeah, from Jindal, we are expecting incremental sales.
Sorry to interrupt, sir. Mr. Raj, I request you to come a bit close to the handset as you sound a bit distant.
Now is it fine?
Yes, sir.
Yeah. I think 120 crores from Jindal Supreme in FY25.
We are not able to hear you.
Hello. Am I audible now? Hello.
Yes.
Am I audible?
Yes.
So from Jindal Supreme, are we expecting an incremental sales of 100 to 120 crores for FY25?
All numbers are in public domain. I think you can do the calculation very easily.
All right. Yeah.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Yeah. Namaskar, sir, and thank you for the opportunity. Sir, as you have mentioned that the business is from ONGC, so there is a very strong client concentration, although we have been maintaining 3 decades of relationship with them. So in terms of private players who are there in the rig business, how do our profile of rig matches with their requirements in terms of the rig requirement of Reliance, Vedanta, SR? How have we evaluated that aspect of business?
The private players, the contracts are usually much smaller. We have always preferred to go with ONGC because it was 3 to 5 year contracts and constant and better. Obviously, you get better revenues with private players because it's shorter periods. And when I say short periods, it's like sometimes it's 10 days also. So we have to move our rig to the location, deploy. Maybe certain times it might remain unemployed. So it's always better to go with